Sir Isaac Newton, a name that conjures up visions of falling apples and groundbreaking theories on gravity, is universally hailed as one of the most influential scientists in human history. Yet this intellectual giant was also a product of his times, an era marked by economic volatility, speculative fervour, and the allure of quick riches. Join me as we delve into a lesser-known but equally fascinating aspect of Newton's life, his unfortunate investments in the South Sea bubble of 1720. By the time Newton was approaching his 80th birthday, he had already changed the course of science forever. His theories on motion and gravity were revolutionary, laying the foundation for much of modern physics. But Newton was not just an academic recluse engrossed in his studies, he was also a man of considerable financial means. In his role as the Master of the Royal Mint, a position he held since 1699, Newton earned an annual income of around £1,200. This would be around £200,000 today, placing him squarely in the top 1% of earners in Britain at the time. Newton was more than just a brilliant scientist. He was also a shrewd investor with a knack for growing his wealth. His investment portfolio was diverse, encompassing a range of assets from government bonds to shares in joint stock companies. One of these companies was the South Sea Company, where Newton initially invested between £3,500 and £4,000. This was a significant investment, even for a man of Newton's wealth, and it reflected his confidence in the company's prospects. He was not a passive investor. He actively managed his investments, making calculated decisions based on the available information. The South Sea Company, founded in 1711, was not just any company. It was a financial institution with deep ties to the British government. Initially established as a public-private partnership to manage and reduce the British national debt, the company was granted a monopoly on trade with South America. While this trade was not particularly profitable due to the ongoing conflicts with Spain, the company's debt management operations were seen as stable and reliable. As a result, its stock quickly became hyped among investors at the time. The shares, initially priced at around £100, had a reputation for steady, albeit modest growth. However, this apparent stability masked the underlying vulnerabilities, setting the stage for one of the most infamous financial bubbles in history. In the year 1720, the South Sea Company made a bold financial move that would have far-reaching implications. The company proposed to take on a staggering £31 million of the British national debt, a sum that was astronomical at the time. This audacious plan was met with widespread enthusiasm both from the government and investors. As a result, the company's stock prices began to soar at an unprecedented rate. Now, Newton sensed a golden opportunity. He decided to sell off his shares in the company, walking away with an estimated profit of £7,000, enough to purchase a grand estate. However, Newton's financial triumph was short-lived. As the stock prices continued to rise, reaching close to £1,000 per share, Newton became blinded by FOMO. Unable to resist the allure of even greater riches, Newton decided to re-enter the market. The stock was now significantly more expensive than when he had initially invested, but the promise of exponential gains was too tempting for him to resist. Newton invested approximately £26,000 into the South Sea Company, effectively putting nearly all his liquid assets into a single, highly volatile investment. The South Sea Company's stock reached its zenith in August 1720. The bubble was fully inflated, and like all bubbles, it was bound to burst. By December of the same year, the stock had undergone a catastrophic collapse, plummeting to a measly £124 per share. The financial fallout was devastating for many investors, and Newton was no exception. His £26,000 investment had evaporated, slashing his net worth in half, and leaving him with an estimated loss of £20,000 or £3.3 million today. The financial loss that Newton incurred was undoubtedly devastating, but the psychological ramifications were perhaps even more profound. Newton was a man who had built his entire career on the bedrock of rational thought and empirical evidence. His scientific achievements were the result of meticulous observation, logical reasoning, and the relentless pursuit of truth. Yet when it came to the South Sea bubble, these principles were absent. Newton fell victim to the same speculative mania that had gripped the nation. But for Newton, this was not just a momentary lapse in judgment, it was a fundamental betrayal of his own intellectual principles. The loss served as a stark, humbling reminder that even individuals of extraordinary intellect are not immune to the basic human emotions of greed and the fear of missing out. It was a psychological blow that would haunt Newton for the rest of his life. Sir Isaac Newton was a man of many contradictions. He was a groundbreaking scientist whose theories revolutionized our understanding of the universe. He was a devout Christian who spent years studying biblical texts and alchemy. And yet, he was also a human being who made a monumental financial blunder, one that cost him not only his fortune, but also his intellectual self-esteem. As he once said, "I can calculate the motions of the heavenly bodies, but not the madness of people." His involvement in the South Sea bubble serves as a window into the complexities and vulnerabilities that even great minds possess. It truly is a humanizing story, one that many of us can relate to in the modern day as we live through similar economic bubbles. We are a product of our times, just as Newton was of his.